Well, the mistakes we made, and we made them, some of them big time, are of two kinds. One is when we didn't invest at all in something that we understood that was cheap, maybe because we weren't even working hard enough at looking at the whole list, or because for one reason or another we didn't take action. And the second was starting in on something that could have been a very large investment and not maximizing it. Charlie is a huge believer in the idea that you don't sit around sucking your thumb when something comes along that should be done, that you pour into it. And that's generally what we've tried to do, but there have been times, and it's usually happened when I've started buying something at X and it went up to X plus an eighth or some intolerable amount like that, and I quit or waited for it to come back, and we missed in some cases billions of dollars of profit because of the fact that I'd gotten anchored in effect to some initial price when I could have paid more subsequently, and it really was inconsequential.
Do you have anything worse to confess than Walmart?
Well, Walmart, I cost us about it's up to 10 billion now. I cost us about 10 billion. I set out to buy 100 million shares of Walmart pre-split at about 23, and Charlie said it didn't sound like the worst idea I ever came up with, which is, from him, I mean, it's just ungodly praise. And then, we bought a little, and then it moved up a little bit, and I thought, well, maybe it'll come back, or what. Who knows what I thought? I mean, only my psychiatrist could tell me. And that thumb-sucking, reluctance to pay a little more, the current cost is in the area of 10 billion. And there have been other examples too. And there will probably be more examples in the future, unfortunately. But that's on the other hand, it doesn't bother us. I mean, it's maybe instructional to talk about it just a little, and I'm glad to respond to the question. But in the end, we're going to make a lot of mistakes at Berkshire, and we've made them in the past. We'll make them in the future. If every shot you hit in golf was a hole-in-one, it wouldn't be. The game would soon lose interest. So you have to hit a few in the woods occasionally just to make it a little more interesting. We'll try not to do that too often, but those will be the kind of mistakes we make. We probably won't make the kind of mistakes, although we made one with Dexter Shoe, but we probably won't make the kind that cost us a ton of money. There'll be much more of omission than commission, I think you'll find in the future. Charlie, you want to add any more?
Yeah, at least we are constantly thinking about the past occasions when we blew opportunities. Since those don't hit financial reports, the opportunities you had but didn't accept, most people don't bother thinking about them very much. And at least that is a mistake we don't make. We rub our own noses in our mistakes in blowing opportunities, as we just did.
Peter Kenner from New York City. Good afternoon, Warren, Charlie.
Hi, Peter.
Good to see you. I'd like to ask you what your thought process was when you, or share with us your thoughts when you decided to sell McDonald's
That must have been Charlie's idea, Peter. Peter, incidentally, is in a family that 4 generations have essentially invested with us, and they're all terrific people, I might add. His dad was a wonderful guy. I said it was a mistake to sell it, and it was a mistake, and I just reported that in the interest of candor, and there were some reasons why I thought it was something I didn't think obviously that it was any great short sale or even a great sale, but I didn't think it belonged in the list of 8 or 10 of the businesses, of the very few businesses that we want to own in the world. And I would say that that particular decision has cost you in the area of $1 billion plus. Charlie?
You want me to rub your nose in it? You're doing it. You're doing a pretty good job by yourself. By the way, that's a good practice around Berkshire. We do rub our own noses in it. We don't even need the help of the Kenters.
We believe in postmortems at Berkshire. I mean, we really do believe. One of the things I used to do when I ran the partnership was I contrasted all sale decisions versus all purchase decisions. It wasn't enough that the purchase decisions worked out well. They had to work out better than the sale decisions. And managers tend to be reluctant to look at the results of the capital projects or the acquisitions that they propose with great detail a year or two earlier to a board, and they don't want to actually stick the figures up there as to how the reality worked out against the projections. And that's human nature. But I think you're a better doctor if you drop by the pathology department occasionally, and I think you're a better manager or investor if you look at every one of the decisions you've made of importance and see which ones worked out and which ones didn't, and you know, what is your batting average? And if your batting average gets too bad, you better handle the decision making over to someone else. Charlie, you want to rub my nose anymore?
No.
No, that's
no.
okay. Okay, we're zone 8.